what I like to talk about is like the story of your
Mhm.
business is often told through the numbers. It's really, I can see my clients' financial values very clearly and the values of their, as a business owner, they shine through in those numbers. And so when you're looking at those and getting more clear,
Mhm.
you can get a better idea of who you are as a business owner, as a practice owner, as a leader. If you have a group practice, what you're investing in. So it's very fascinating.
Welcome to the Therapy Show podcast. I'm your host, Lisa Mustard. In each episode, I interview a seasoned and knowledgeable talk therapist from the counseling world to glean valuable insights, techniques, and tools that you can apply to your practice and your life. And if you're considering a career in the counseling field or just want to hear about what it's like to be a talk therapist, then this is the podcast for you. I don't know about you, but when I graduated from my counseling program, I didn't know the first thing about starting a private practice. And yet, that was one of my professional goals, hanging a shingle and proudly launching my counseling practice. Well, my counseling career didn't unfold like that, and my career path has definitely taken a different turn. And while I don't have a private practice, I do own a business, one that needs bookkeeping and accounting services. So when I reached out to Michael Spencer to learn the basics of bookkeeping, I knew her wisdom and knowledge could help other therapists who are considering going into business for themselves, whether that's a private practice, consulting business, or perhaps creating a product or service that therapists need. Michael Spencer is the owner of Michael Spencer Bookkeeping, a virtual bookkeeping business serving counselors, therapists, and helping professionals in private practice. With a first career in auditing and accounting and a second career as a licensed professional counselor and coach, Michael brings a unique skill set to her bookkeeping services. She connects with her clients with warmth, compassion, and deep listening. She keeps their books accurate and up to date every month and helps them make sense of their financial information. She is a QuickBooks online certified pro advisor and a Gusto certified payroll people advisor. To connect with Michael and learn more about her services, please visit her website, mspencerbooks.com. So, this episode is titled Basic Bookkeeping for Business Planning and Growth. It's a Podcourse, and that means that it qualifies for continuing education contact hours. And we have three main objectives that Michael is going to cover. Number one, summarize bookkeeping and discuss the difference between bookkeeping and year-end tax prep. Number two, identify 3 habits that keep bookkeeping up to date and accurate. Number three, discuss how to use financial statements to make business decisions. If you decide you'd like to earn the contact hour for this episode, just head to my site, lisamustard.com, and click on the Podcourses tab. You will find this episode listed and then just click purchase. You can get your first Podcourse for free when you head to my site. We hope you find this episode helpful as you navigate your business planning and growth. Well, hey, everybody, welcome to another episode of The Therapy Show. I'm your host, Lisa Mustard, and this episode is a Podcourse with Michael Spencer. Welcome to the show, Michael. It's awesome to have you.
Thanks, Lisa. It's great to be here.
Yeah, I'm really excited to have you. You and I connected, over a year ago
Mhm.
on social media. And I love how social media brings some awesome people into my life. So I'm
Yeah.
grateful for you to be here and to share your wisdom and your knowledge. So share with the audience, with the listeners, who you are, what you do, and how you got to where you are today.
Sure. So I am a bookkeeper for therapists in private practice. And the way I got here is sort of a twisty, turny road. So, right out of high school, I went to college and I got my degree in accounting. And then I had a pretty traditional career in public accounting for 7 or 8 years. I held a certified public accountant license and I was an auditor for nonprofit organizations and local governments. Ended up getting a job in local government, which was, it was a great job. It was great money and benefits and, a lot of security. And I found myself getting really kind of bored and stagnant. And so I decided to quit my job and go back to school and get my degree in mental health counseling, which I did. And that was just incredibly rewarding. And I really loved that work. I practiced maybe for 6 or 8 years. I had my own private practice. I worked with people who were experiencing trauma and, early childhood stuff. And I actually ended up getting kind of burnt out. as many therapists can relate to. And so then I shifted into coaching. And last year, because I wanted to supplement my income, so many of us were experiencing changes and things with COVID and everything that was going on. And so I decided to pick up some bookkeeping clients. Now, I had been doing bookkeeping for my husband's trucking business and for my own businesses for quite a while. So I'd never really fully gotten away from the accounting. And I picked up a couple clients who were not therapists in private practice, and I was really enjoying it. And things just started taking off. And so last fall, I thought, I'm really going to start focusing because I have this background in therapy. I understand private practice. I understand, a lot of not only what the business side of what therapists go through, but also, the mental, emotional stuff that therapists experience too. I thought, wouldn't that be great to serve therapists in private practice as a bookkeeper, just sort of bringing all of this together from these two very different backgrounds that I have. And I have been loving it. I have, I think, 4 private practice clients right now. And it's just wonderful because it's not only doing the books, it's also, connecting with them and talking about, business management and managing their finances and their money. And as you may know, this can be something that a lot of private practice owners avoid and don't want to deal with. And so feedback that I get from my clients is that I make it really accessible to be able to ask questions and learn things so they feel a lot more empowered about the financial side of their business, which is just huge.
Yeah. Oh, I love this. I'm one of those people that I am probably so guilty of putting off financial decisions or financial responsibilities when it comes to my business of, the podcast and coaching. So I'm really looking forward to learning from you today. And you're covering some great stuff, some great information. You're going to cover 3 main objectives, and I'm going to read them to the listeners so everybody has an idea of where this is going. So learning objective number 1 is to summarize bookkeeping and discuss the difference between bookkeeping and year-end tax preparation. That's great. Number 2 is identify 3 habits that keep bookkeeping up to date and accurate. I'm really looking forward to that one. And then learning objective number 3, discuss how to use financial statements or the product outcome of bookkeeping to make business decisions. Oh, once again, I'm really looking forward to all of these topics. This is just going to be great. And for those listening, don't forget that if you are enjoying this Podcourse and you would like to receive credit, all you need to do is head to my website, go to lisamuster.com/podcourses and find Michael's Podcourse there, and you can purchase it and get 1 hour of NBCC continuing education clock hours. And don't forget, your first one's always free. I got to plug that because I want people to know they get their first one free. Okay, so Michael, where do you want to start? Should we jump into summarize bookkeeping and discuss the difference between bookkeeping and year-end tax prep?
Yeah, I think that's a really good place to start because a lot of times I think for some people there can even be this really I'm not even sure what bookkeeping is actually, this confusion. So, I just looked up on the internet just a general definition of bookkeeping because, it's so inherent in who I am. It's like, okay, what is this actually? And so a definition of bookkeeping is the activity of keeping records of the financial affairs of a business. So if we think about that, transactions happen in a counseling practice. You might receive a payment from a client or an insurance company, or maybe you write a check for your liability insurance, or maybe your credit card is charged for practice management software. And so bookkeeping is keeping records of those transactions and not just the receipt, right? Because you might have, an emailed receipt or whatever. So it's keeping records of all of that in some sort of consolidated package. And that could be an Excel spreadsheet. That in some cases, very basic cases, that could be your checkbook. And it could be something like Quickbooks or Wave, one of those software packages. And I will just say a lot of the resources that I provide for people who are doing the continuing education credit are related to QuickBooks, but they might be from QuickBooks or people talking about doing bookkeeping in QuickBooks. But the information is kind of universal. So even if you use a different system, it should still be helpful. But that's just my realm of expertise is in QuickBooks.
Okay, cool.
Yeah.
So when you talk about QuickBooks and Wave, those are going to be outside resources or products that we would need to purchase and have. Okay. And how often do you suggest we go into the the QuickBooks or the Wave and keep tabs of what it is that we're doing?
Yeah, ideally, I would say weekly.
Okay.
And I know for some people that might be like, especially for folks who, if you have, let's say, Simple Practice or Theranest, and you've got transactions coming in, client payments being posted on a daily basis. Now, in Simple Practice, you can have those posted on a weekly basis, which is nice because it could take you from like 20, 25, 30 transactions posting in a month down to 4 or 5, which makes it much easier to manage. If you're getting insurance payments, those are coming in all the time. And if you wait to the end of the month or the end of a quarter or heaven forbid, the end of the year, there are so many transactions to try to summarize that it can just get totally overwhelming.
Right. Okay. So for what I'm hearing is it would be wise to do it one day a week, maybe your admin day or the day you focus on, catching up on all your paperwork, something like that. I think that's really wise.
Yep, exactly.
Okay. And are those services, do they have like a free version and then you can upgrade to a paid version? Do you know?
I know QuickBooks, their simple start, I believe, is around $25 or $26 a month. Their essentials is around $40 a month. If you're new to QuickBooks, and I don't know if other paid programs do this, but if you sign up through a QuickBooks Pro Advisor, you're able to get half off starting at the essentials package. So where that's $40, you get that for $20 a month. Okay. So if you're a new QuickBooks subscriber, that can be helpful. So it takes a little bit of the bite out of that. Yeah. And I believe Wave has a free version. I'm not 100% certain of that.
Okay.
Yeah. And so, and even like I'm saying, like an Excel spreadsheet might be able to work as well, depending, once you get into the group practice realm where you've got multiple therapists, especially like on the income side, you're going to have a lot more transactions coming in. It might be nice to get something where you can, so one of those systems like Wave or QuickBooks will allow you to connect your bank account to that accounting software. And then all of those transactions will come in from the bank. And that just makes it so much easier to start categorizing things. Things can get a little bit messy in there if you don't know exactly how to use your system. So it's important to make sure you're really clear about that so you don't get into some bad habits that end up creating messes.
Right.
But as long as you are familiar with what you're doing and can do it properly, it can take a lot of work off your plate.
Okay, great. And is that something that a bookkeeper can do for a therapist? Okay. All right. So you could hire somebody to help you with this if you feel like you just don't have the time for it, or it's you would like to outsource it because you'd rather spend your time doing other things. That's an option as well. Okay, cool.
Absolutely. Yeah. A bookkeeper. So like what I do and what many bookkeepers do is I actually go in and categorize all those transactions that are coming in through the bank feed. I may do some comparison, like I'll often do some comparison between Simple Practice, not on the insurance side, but just those Simple Practice payments to make sure that what's showing in Simple Practice is what's actually showing up in the bank. As far as the insurance payment, it's always good if you've got a billing person who's making sure that what's been billed is what's actually coming in.
Right. Okay. So this is just like, I never thought about this, but do you have to be licensed to be a bookkeeper or have credentials or anything?
No, you do not. You do not. And so just to clarify, my CPA license is currently on inactive status. I'm working I need 80 hours of continuing ed to get it out of inactive status. So I'm working on that right now. But no, bookkeepers. And so it's really kind of neat. There are a lot of bookkeepers out there. And especially with COVID, I think a lot of people started doing bookkeeping because it's something that you can do virtually from home. And it doesn't require a license or anything like that. So it's good on one hand because, it's an open field. But at the same time, if a therapist is looking for a bookkeeper, you want to make sure to vet them and make sure that they really know what they're doing.
Yeah, for sure. I that's very wise. You make sure that you have the references and you have
Mhm.
referral and all that good stuff. Okay, this is really helpful. I'm getting personally getting some great stuff out of this.
Wonderful. And so the bookkeeping and gathering all of that information and putting it together in some sort of systematic order is what allows you to be able to have information to give to your tax preparer. So if you're kind of scrambling around at the end of the year trying to pull everything together to give to your tax preparer, you're doing all of that bookkeeping at one time.
Yeah.
Where ideally, if you're doing it weekly or monthly, you're going to have access to all of that really great financial information throughout the year.
hmm
And we want that.
Right. You don't want to
That
do
way,
it last minute because you're going to miss stuff. You're going to overlook things.
yeah, in terms of what you're actually sharing with the IRS. And also, you can be missing trends that are happening in your business. You can be missing what I like to talk about is like the story of your
Mhm.
business is often told through the numbers. It's really, I can see my clients' financial values very clearly and the values of their, as a business owner, they shine through in those numbers. And so when you're looking at those and getting more clear,
Mhm.
you can get a better idea of who you are as a business owner, as a practice owner, as a leader. If you have a group practice, what you're investing in. So it's very fascinating.
Can you speak more about that? I'm curious to learn a little bit more about
Yeah,
types of maybe themes you see or what you can tell by
yeah,
'cause that's good insight for the therapist who is maybe not doesn't see it as clearly as somebody who's on the other side looking at you're piecing together their story.
right,
That's really
right.
cool. Mhm.
Yeah, and so, there might be a therapist who really values continuing education and professional development above and beyond what's required for licensure.
Mhm.
And so it's like, okay, wow, if there's some extra money, I want to invest in this course, and that also becomes that shows through as a value often of a therapist wanting to serve their clients better, and wanting to be sure that they're really investing in that. Another thing that I see sometimes with group private practice owners is the ones who really invest in extras for their staff, whether that's making sure that they always have snacks or a meal at a staff meeting or, just those little touches that can make a difference.
Mhm.
And so I think, sometimes we can just have a lot of different ideas and thoughts about money. I really like looking at how do people invest their money in their practices.
Mhm. Mhm. It says a lot, I'm sure.
Yeah.
Yeah, that's really cool that you can get such an interesting story of whoever you're working with, and not just with therapists, but with other
Mhm.
professionals as well. That's pretty cool.
Yeah.
Okay. Is there anything else you wanna say about how it differs from year-end tax preparation?
No, other than, the bookkeeping is what really creates order out of the chaos. And for anybody who has scrambled around at year end, trying to find receipts and trying to pull things together and trying to reconcile their bank account, can definitely sense that it can feel very chaotic. And so the bookkeeping is what brings order to that and then allows you. And I guess another distinction is I, for instance, am not a tax preparer. There are lots of bookkeepers who also do taxes. Because of how much the tax code changes year to year, I just leave that to other folks. I never specialized in taxes in my first career. And so, that's another distinction is looking at if you do have someone who is doing your bookkeeping and your taxes, is those are two different services and they don't necessarily need to be done by the same person. And if they are, that's fine too, but just recognizing that those are two different things. Preparing your taxes at the end of the year is different than doing your books.
Gotcha. Yes, makes sense. Makes complete sense. Understood. And I know that we'll probably touch on this at some point, but what's an average rate for bookkeepers? Like, because I'm a lot of listeners might be thinking, oh, I really could use this as part of my financial system. And what would you say is like an average rate? And how does that work? Do like you hire somebody for the year? Do you hire them for the month? Like what does that look like?
Yeah, these are great questions. So a couple things. The rates vary a lot. I've seen people advertising $150 to $200 a month, up to $500 to $700 a month. And a lot of times that's going to vary based on whether it's going to vary on a couple things. Number one is the number of transactions that you have running through your accounts, because that's one of the things that determines the amount of time that it takes. Mm-hmm. It's also going to depend on whether you are receiving just bookkeeping services, or if that bookkeeper is also offering any consultation or advisory services. So an ongoing advisory services might be, talking about financial management and guidance around those things above and beyond just, here's your monthly financial statement.
Gotcha.
And so those are things to be looking for if you're shopping for a bookkeeper is, what types of things are included in these packages.
Okay. Makes sense. And do you usually hire them monthly? You go monthly, most people?
I know for myself, I have an agreement that I have folks sign, but that is a monthly agreement that can be terminated at any time with a 30-day notice on either side, because I never want people to feel like they're locked into a whole year of my services. If for some reason they decide, I want to start doing this myself, or I want to choose a different provider, I want them to feel like they have, the ability to do that at any time. I don't know if there are other practices, other bookkeeping practices that do like a year-long or 6-month agreement. I know the other bookkeepers that I've talked to tend to do a month-to-month agreement.
So it's pretty common to do the month-to-month. Okay.
Yeah.
Makes sense.
And then typically there may be some hourly work up front if somebody has a lot of cleanup in their books that needs to be done. And sometimes that can also be proposed at, just a lump sum. I've also started doing a diagnostic review, which is a common practice. So if you have existing books and they're in QuickBooks, I would charge a fee to go in and do a diagnostic review just to see, like, what are we looking at if I do need to do cleanup work? And then that's a report that the client gets to have, and they could take that and they could do the work themselves. They could have their tax preparer do it. So it's not work that I necessarily would have to do, but it gives you a really clear and clean idea of what is going on in my bookkeeping records, what needs to be cleaned up and fixed for them to be accurate.
Cool. Okay. This is so helpful.
Yeah.
I am learning so much because I know I need this personally. Okay. So what are 3 habits that keep bookkeeping up to date and accurate? I know you touched on this just a little bit, but let's really go into some details here.
Yeah. So I'll go over the 3 things and then we'll do them in more detail. So the first is recording and categorizing transactions. The second is reconciling your accounts. And the third is reviewing. So the first, the recording and categorizing transactions, is again, like, you may have receipts from all those different transactions that we talked about, but you really want to make sure that you have some consolidated way of recording them so that you can also access that information. Like, isn't it great if you're like, wow, how much have I spent on insurance so far this year with this company? You can just go right into your bookkeeping system, look at that vendor, bam. Oh, I can see I've spent $500. It makes bookkeeping really useful, but it also makes sure that if you're going through and doing that on a regular basis, you're making sure that everything's getting captured in your system. And then you're also making sure that it's categorized correctly. So, you don't want, let's say you have Gusto as a payroll service. You don't want your Gusto fees, so the fees that Gusto charges to do that payroll processing work, to accidentally be getting posted to your payroll taxes account, because then your fees for that service are going to be understated, whether you have that in legal and professional fees or some other account, and then your payroll tax expense is going to be overstated. And those are things we want to make sure that those are proper. So making sure that things are categorized correctly is really important. But just to be clear, I know I've said a couple of times about, doing an Excel spreadsheet or a more robust system like QuickBooks. The IRS does not specify what kind of bookkeeping system a small business has to use. So, and I do want to point out in the references and resources, if you're getting this for continuing education credits, I have put a couple of things in there that the IRS has put out about record keeping for businesses that can be really helpful, because a lot of times before a practice or a practice owner is really getting into looking at the cash flow management and financial management of their business, they're keeping these records for tax purposes. And so it can be nice to see, what does the IRS say about this?
Mm-hmm.
What does the IRS say I should do, shouldn't do, just to make sure that you're doing things properly.
Gotcha.
Yeah. I think the other reason, when we talk about categorizing expenses, it helps to make sure that they're in meaningful buckets, so to speak. So when you're looking at your financial statement and you see something, QuickBooks has a thing where one of their standard accounts is office supplies and software. I don't like this at all, because it's putting things that are kind of different. And for a private practice, you've got all kinds of software. You've got, your email, your practice management software, maybe cloud space, all sorts of things. And then you've got office supplies, like you're getting pencils or paper for your printer and things. To me, those are two different things. So it can be nice to know what is in each one of those financial statement line items, and is it meaningful to you as a business owner as you're looking at them?
Gotcha. So you want to be as clear and detailed as possible.
Yep. And
Yeah.
then consistent. So if you say, I'm going to always post such and such to this account, then make sure that you put it to that account.
Cool. What are some common categories for therapists, or maybe some that are uncommon that we might forget about?
Yeah. Let me think off the top of my head. So again, the office supplies, software, legal and professional services is pretty common. So you might have a bookkeeper, you may have consulted with an attorney about, your business formation, or, maybe you're going to offer a new service and you want to check with that attorney to make sure, you're setting it up properly. Of course, your liability insurance, you may have dues and licenses. And so whenever you renew your license, something that most of my clients, well, all of them really have, is, like I said earlier, continuing education and professional development. Of course, you're going to have an advertising line item, which, that could be for advertising on social media. It could be for advertising, if you happen to do a print ad in a local paper, if you have a brick and mortar building. If you have a building, you're going to have rent, possibly utilities. So, yeah, I'm trying to think if there's anything. Oh, and most of my clients have Psychology Today. And so that's something that's going to go in advertising and marketing. Interest expense, maybe if you have a loan. Yeah.
Get you thinking about all the things that go into, running a business. It's pretty, we don't learn any of this in grad school, like nothing. And I know that I was just sharing this with on another podcast with a guest, I think was, when I look around at my grad school peers, I want to say 85% of us, our goal was to own our own private practice. And for whatever reason, we don't get a lot of coverage or information on how to do that, to create a private practice or to go out there. But, and definitely, my therapist brain, I'm not a money, or I'm not saying money. I'm not a math, wired for math sometimes. So this can cause some stress for me when I think about, bookkeeping, end of the year. And so I'm the kind of person that puts it off.
Right.
I'd rather just put my head in the sand and be like, I'll deal with it under pressure. But that's, I've learned to run a healthy business that doesn't bode well.
No, it doesn't, because it adds a ton of stress. And then there's also this overall, like, this mystery throughout the year of, like, where am I?
Right.
I've talked to several clients who say, I know I've got money in the bank, but, like, how is my business doing? Yeah. So it's really important to be aware of these things. And then, it just gives you this insight into your business. If you take some time and sit down and go, okay, what are my monthly expenses to run this business? What is my rent and utilities? What does it cost for Simple Practice or Theranest or, other EHR software? What does it cost to have email system? What's my website cost? Then you can start to get a lot more empowered too, about, like, wow, I'm paying so much, I'm paying this amount of money per month. Is this something that I should shop at some point? A lot of times I think business owners, whether private practice owners or not, start their business and go, okay, well, I need this for a website, this for this service. And then they just sort of go, that's just what I have. And they don't take a look at that 3 years down the road and go, oh, wow, there's a much more affordable option that I could be looking into. Because it takes time to do that,
Yeah.
and it's like the squeaky wheel thing, right? Like if it's not too problematic, but sometimes you can start to see those trends in your business when you're looking at the financial statements and going, wow, I had
Right.
no idea I was spending this much on XYZ.
Right. And I like what you said earlier. Just this conversation's taking me back to what you said earlier. Like you can see where your values are with
Yeah.
your business. And it just gets me thinking about, when I look at my financials, like, oh, well, I'm doing this over here. And I didn't realize I was making that percentage of income was coming from here. And should I pursue more of that? How did this come to me? Where's that client coming from? Or that's really interesting that my niche over here is this. So I love that. I think that you're making it so much more interesting for me to like dive into, learn more about my business and not feeling so stressed and just be more curious about it and less judgmental, I guess is what I'm saying.
Yes.
Yeah.
Oh, I think that is huge.
Mhm.
That's a huge, it's so significant to bring that type of perspective
Mhm.
of, curiosity, non-judgment, because then you can kind of open your eyes, open your heart to really what's there.
Right. Yeah.
And I love what you said about you may have discoveries about a particular, the profitability
Mhm.
of a particular service. It's like, wow,
Yeah.
do I want to invest in a little bit more advertising and do more of these groups? Or do I make a lot of money from supervision?
Mhm.
Do I want to offer more supervision? If that's something that really lights somebody up and it's a good income generator, like, maybe.
Yeah. 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 Should I do more coaching?
Right. Right. I mean, that's a huge question on so many therapists' minds today.
hmm So
Yeah.
let's talk a little bit about that. That's not really on our docket, but I find this to be interesting because there are a lot of therapists that are moving from clinical work to coaching. And as a bookkeeper, what does that look like for us and then for you? Can you just touch on that a little bit?
Yeah. I think number one, it's important to talk with an attorney and determine if you need to have two separate business entities created. In which case, if I were doing the bookkeeping for a therapist that also had a coaching practice, we're going to have two different sets of books and we're going to record everything in the therapy practice on one, everything in the coaching practice in another. It can get kind of interesting because there may be some shared expenses. And so it would be, working with the bookkeeper and the tax preparer to see how some of those things should be split.
Hmm.
Yeah.
That's interesting. I didn't think about that because you're using the same space, probably. You might be using the same software.
Mhm.
Yeah, that's a really good point. I didn't think about that.
Yeah.
Mhm.
Yeah. And then, if you've got two separate entities, you really need to have two separate bank accounts.
Mhm. Yeah.
And this just going like in reverse, backing up way back for anybody who is having any questions about this at all. It's very, extremely, very, very important to have a separate business bank account.
Yeah.
And, I think most therapists in private practice know this because you've had to set up, probably an LLC, maybe an S Corp, but keeping the business and personal separate is very important.
Right. Right. For the taxes.
Yep. For the taxes. And I think also to really have a clear picture of your
Yeah.
business. If you've
Yeah.
got personal expenses running through your business, then you don't actually know what does it cost to run my business. You know what it costs to run your business and some of your life.
Mhm.
And you want to have that separated.
That's a really good point. I'm so glad you brought that up because I have been guilty of, on the fly buying something with my business account that was groceries, because it was my daughter
Yep.
handed me the wrong card and I just was like, oh, there goes, things
Yep.
like that. So I think that's really wise and to be very intentional about it and give it some thought. That's great. That's great.
Just to point out, if that ever happens, because that it happens actually a good bit, those kind of fluky things. And sometimes because there may be money built up in the business account, it's like, oh, I'm just going to make this purchase from the business account for my personal life.
Mhm.
What a bookkeeper will do is go, okay, I'm going to show that as an owner's draw. So I'm not going to show it as an expense of the business. I'm going to show it coming out of the equity of the business, which will show up differently on your tax return. It's not going to show up as a business expense. So there are ways to deal with that. The important thing is to make sure that your bookkeeper is aware of that. So that transaction is flagged somehow like, hey, this is personal, as opposed to it just getting lumped into office supplies or something. And then all of a sudden it's becoming a business expense accidentally.
Right. Oh, that's so smart. That's so smart. I'm so glad you said that. I'm already thinking about my podcasting expenses and groceries on the same account. Like, oh,
Right.
I did that. I know I did. I've done that once or twice. So that's really helpful. And I need to, make note of that and realize that not everything that comes out of my business account is going to be a service or a fee or, something to support my business.
Mhm.
Really, really glad you said that.
Yeah. I want to make sure we loop back around to the 3 habits. So the second habit is to reconcile. So after you've recorded and categorized all those transactions, you want to make sure that what is being recorded in the books is aligning with what's actually happening in the bank or on a credit card. And so, if you reconcile your personal bank account, you already know how to do this conceptually. It's, oh, you get to the end of the month and there's a difference between what's in your checkbook and what's in the bank. And a lot of times that's going to be outstanding checks. Now, a lot of therapists are not writing a ton of checks, but sometimes there are checks written to clients to reimburse for, you know, some fee or something. Sometimes those checks take a while to clear.
Mhm.
And so that's something that is a common outstanding item. There may be a deposit that you made right at the end of the month that doesn't clear until the second or third of the next month. So just things like that are important to look out for, because when a check is written or when a deposit is made is the date that it is actually considered an expense or income for cash basis, which is what most therapists are operating on. And so, I had a situation with a client where she had written checks very close to the end of 2020 for a particular service. Those checks didn't get cashed, but they had been submitted, they had been sent in. They didn't get cashed until 2021. And so they almost didn't get picked up as 2020 expenses, which they properly should have been.
Mm.
And it was like $3,000.
Oh,
It wasn't like 30. So it's it's important to have a bead on those sorts of things. And also, we can put a lot of faith in the bank and like, oh, I'll just take whatever the bank says as what happened. If you're not doing some type of comparison, banks make errors all the time. That happens. And so it's really important to make sure that you're not missing transaction didn't get missed or lost, or something didn't go through for the wrong amount. Sometimes things get transposed. I just had somebody, this is a very, very minor amount, but an example of something that could have been much bigger. There was a check that was supposed to go through for like $100.51, and the bank read it as $100.57.
Mm.
And so again, that's a very, very minor amount of, 6 cents, but what if it had been $600?
Right.
You know?
Yeah. And I've had that happen with my account too. So you want to definitely make sure that, you are reconciling everything. And also, definitely go over your account, because I was getting charged for something monthly that I never purchased. So I had to put that into the bank, and I just happened to catch it one day because I was like, wait a minute, I don't have this service. And it was only like $15, but it had been like 3 months when I went and looked.
Right.
It was really, and it was wild to me. And I was like, well, how did that get in there? And they seemed to think my card was hacked, or somebody somehow used my card to buy a service. But they only bought that one thing. And I was like, that's weird.
Right. And what a great example of things that can happen.
Mhm.
That also brings up for me, one of the other reasons it's really important to just be paying attention month to month to what's happening is sometimes we intentionally sign up for things
Mhm.
and then we stop using them for whatever reason. But we may, because of those automatic charges on the credit card or coming out of the bank account, we may be losing $100 a month on something because we've just forgotten about it.
Right, right. Like your subscription services to certain sites that you watch movies on or shows. It's easy. I have let stuff go that we're no longer watching or using.
Yeah.
And no, that's really wise. And so it's good to definitely, even if you're not in private practice and you have an agency job, or it's just good to be on top of your financials in general. I mean, this is just great information.
Yeah.
Is there another habit?
Yeah, and that's just to review. So looking at your financial statements and seeing if everything makes sense, just making sure that something didn't get miscategorized. One of the things about what's called a double entry accounting system, which is like QuickBooks, Wave, I believe, is a double entry system, is it's not only recording your income and expenses, it's also recording your assets, liabilities, and equity. And so a lot of people, and why would therapists know this, right? You got trained to be a therapist, not an accountant. And double entry accounting is it's complex stuff. This is where the debits and credits come in.
Mm-hmm.
And so just as an example, if you're not aware, I just had a situation recently where somebody had recorded the PPP loan disbursement as services income. That loan disbursement should have come in as a loan on the balance sheet. And then if it's forgiven in the future, then it would be transferred to other income, but it wouldn't. And then that's for the tax people to determine what the tax law is saying about whether or not it is actually taxable. But we would never want that just lumped in with services income because that's taxable. And if somebody isn't looking over that, that could be a substantial difference in your taxable income.
Gotcha. Very wise. Very important. Very, very important. I mean, that could really potentially, yeah. And so my guess is, as you think about tax preparation, you really want to find somebody who's well-versed in what therapists do. I mean, you don't just, no offense to the places that you can walk in and hand them your stuff, because I've seen things happen.
Yeah.
I've heard horror stories, and it's just, I'm not bashing on those companies by any means. It was another small business that stuff fell through the cracks, and it wasn't, what's the word I'm looking for? It wasn't found until it was way past, it was too late.
Yeah.
So you really want to find somebody who is well-versed in what we do as a tax preparer. Yeah. Okay.
Yeah. And my personal and professional opinion is if you are running a business and it's a substantial business, we're not talking about like, oh, I have a side business that I make, $4,000 a year and I have $1,500 in expenses. If you've got something, and especially like if you've got payroll and, if you've got an S corporation or you've got a really robust sole proprietorship and LLC, single member LLC, I really, really believe you've got to have an outside tax person.
Yeah.
The tax code, the tax forms, things change so rapidly. And I do think, to go to one of those kind of chain tax places can be effective when your taxes aren't too complicated. But my opinion is when they get complicated, when you're running a business, and if you've got a partner, spouse, partner, person who you're also, maybe they also have a business, or even if they have W-2 income being an employee, you still want to make sure that, that person is having an appropriate amount of taxes withheld so that when you get to the end of the year, you do not want to have surprises. And if you're working with a tax firm year to year, they're going to be able to work with you on what should your estimates be. Are you making sure that you're really getting all of the deductions that you can? They're going to, and like you're saying, working with somebody who's very familiar with the therapy field will be helpful.
Yeah. Yeah. I can imagine. Definitely. And there are folks out there who specialize in our field. So I think that's really, really neat that you can niche down and really find your place.
Yeah.
Very cool. Okay. So did we cover everything, or did you cover everything for the objective number 2?
Yeah. Again, we're going to talk a little bit more about financial statements in the next thing. So I think, just wanting to get an eye for reviewing what's in your bookkeeping system to have a sense that you can feel confident that it's been properly recorded is important.
Great. Okay. So that does take us into learning objective 3, which is discuss how to use financial statements to make business decisions.
Yeah. So your financial statements are the product or the outcome of all of this bookkeeping work. And the two main financial statements, as I was talking about earlier, are the balance sheet and the income statement. The income statement, and sometimes it'll be called a profit or loss statement, and that's the same thing. That covers a range of time. So you can look at your income and expenses for a whole year, for a month, for a quarter, and that just gives you different information. And it provides this overview of revenue, expenses, and net income. And so that's a very handy statement. One of the things that you can do with that is put two time periods side by side. And you can look at, so maybe you want to compare last month and the current month, or last month and the month before, or this quarter to last quarter, or this quarter of 2021 to the first quarter of 2020. And you can also take the percentage difference and the dollar change difference. So this can help a number of things. It can help you see the trends in your business. It can also help you see if whoa, something doesn't look right here. I wonder, did I not pay for this big expense that I normally have? Or why has this income item gone up so much? So you start to put on that curiosity and exploration, and you can learn a lot more about what's going on in your business. And then sometimes it's just nice when you're like, okay, as I look down here, things seem to be pretty normal.
Yes, just gets me thinking of so many different things going on in over the past year or so as I've worked to build up my podcast and my business. It looks so different. It's like a roller coaster sometimes,
Yeah.
It's like a roller coaster. So,
Right.
But that's okay. Let's just be aware that that's the ebb and the flow of the entrepreneurial journey. So,
right.
Yeah.
And then it's being able to look at that and go, oh, well, right. That makes sense that July's expenses would be a lot more because that's when I was investing in coaching for my podcast, or that's when I was investing in such and such, So it can give you almost like a little comfort to be able to make sense of things.
Yeah. It just helps you know where you are, where you've been, where you want to go next. I think that's so wise.
Yes. Yes. Yeah. And it also, gives just an opportunity to catch any errors and mistakes, which is good. And then the balance sheet provides this overview of a company's assets, which are the things that you own and what people owe you. Now, most therapists in private practice are not operating on the accrual basis of accounting, where you would be looking at your accounts receivable. So you're basing your income on whatever has been received, not whatever's owed to you by an insurance company, or maybe there's a client that hasn't paid an invoice. You're not recording that income until it actually gets paid. But so the assets for most private practices are typically cash accounts, savings accounts, maybe a retirement account if it's in the name of the business. And then liabilities, what you owe others. So a PPP loan could be on there, a credit card, depending on how you do your payroll. If a practice has payroll, the payroll liabilities and withholdings could be in there as a liability. And then owner's equity is the assets of the practice minus the liabilities. And this is really the value of what the business owner would receive if all the liabilities were paid off and you were kind of cashing out. And the balance sheet is at a point in time. If you think about your cash account, it's always changing. There's always deposits and withdrawals happening. And so a balance sheet is typically at the end of a month or the end of a year. And it partners with the income statement because it's good to be able to see, okay, so I've had this much in income and expenses. How much is still left in the bank? How much do I actually owe people?
Okay. All makes sense. All good information to have. Gets me just, I'm over here thinking, okay, like what do I, where am I in a snapshot of time with all of this? So this is really just
Yeah.
helpful. Okay.
Yeah. It can just really help you see the health of
Hmm.
a business and
Hmm.
of your practice specifically.
Okay. So what else is important for us therapists to know as we consider bookkeeping? And we are coming up to April 15th. That's literally like a month away.
Right. So I think one of the things I wanted to share, and it will be kind of a recap of some of what we've talked about. But when I was talking about the IRS having resources about record keeping, they talk about some of the reasons to keep records. And so, like, if you haven't already been like, all right, I got to improve this for my practice, good records will help you monitor the progress of your business, which we've talked about, and being able to look at the income statement and the balance sheet and just kind of see where you are with things. Are you constantly just barely having enough cash in the bank? Then you got to change your spending habits. And then you can look at your income statement and see like, wow, where are my really big expenses? Like, why isn't this quite working? If you've constantly got a big surplus, it might be a good time to start looking at, do I need to change what I'm paying my therapist? If you have a group practice, do I need to change what I'm paying myself? Because some people in business in general are not good at establishing a salary for themselves. And so they're not giving themselves consistent income. They're just like, oh, I just sort of take stuff when I need it from the business. And so, again, just having those records can help you monitor things a little bit more.
Mhm.
Obviously, the bookkeeping helps to prepare your financial statements, which is super handy. It can help you identify and monitor sources of income. As we talked about that a little bit earlier. Lisa, you brought that up, and it's such a good point about like what's profitable in my business, what's making money, what brings in a lot of money, and I don't have to put out a lot to receive that, and I think there's a lot to be explored. But if
Yeah.
you don't have the data, you can't even start that conversation.
Right. Right.
Another benefit of keeping good records is keeping track of those deductible expenses. So making sure that when you're preparing for tax time, that you're actually getting as many of the expenses that you've spent, that you're actually capturing those so that they can be included on
Mhm.
your tax return.
Right.
That there's nothing worse than spending in your business, but then not having a way to capture what's been spent so that you can have the benefit of having those deductions at the end of the year to offset the income.
Right. Yes. That is so important.
Yeah.
And I laugh because it's just something that I'm constantly thinking about because deductions are big for when you're self-employed and, or
Yes.
you have a side business. I mean, especially if you're not quite there yet where you're making a profit, you're like, for me is like I was putting a lot of money and time into the podcast and creating the courses and getting all the framework done, and I wasn't making any money yet, and that was hard,
Right.
different different mindset for me where I'm used to receiving a salary, from my
Right.
job. So it was I had some work to do around that, and I still do. I mean, I still have to remind myself like this is not going to be something that's going to happen overnight.
Right.
Creating and building a business takes time, and that's
Absolutely.
normal.
Yeah.
Yeah.
Yeah. And so again, I think that just reinforces the point about wanting to be able to have the data so
Mhm.
that you can see like how much can I afford to pay myself? And should I be just keeping more money in the business right now so I
Mhm.
can make sure that I can pay, what's my income and how am I doing paying my monthly expenses and making sure there's money set aside for taxes and there's money set aside for profit, if you're following a profit first model.
Mhm. Mhm. Oh
Yeah.
yeah. So I hear this profit first all the time from my peers. What is the profit first way?
Yeah. So, and I am not a certified profit first professional.
Mhm.
I have read the book, I've implemented it in my own business, and it's in some ways it's very basic and in some ways it's very revolutionary. It is taking the income that comes in to your business in a time period, so 2 weeks or a month, and from that, dividing that up into different envelopes. So it's sort of like a digitized envelope system for businesses where you've got, you're going to set aside a certain percentage of that income that comes in for profit. So you take your profit first, and then you set aside money for owner's compensation. You set aside money for taxes. And then what's left is what you use as your operating expenses to run your business.
Okay.
And so so when you do that, as opposed to what most people do, is they get the income coming in and then they spend a bunch of money on their operating expenses. They might have money to pay themselves at the end of the month. They might have money to put back for taxes. They usually are not putting back anything for profit. And so this kind of flips it on its head, so that anytime you're looking at the bank account that holds your operating expenses, you know exactly where you are and what money you have to invest in your business and to pay those monthly expenses. So it's sort of a simplified version. And again, I'm not a certified Profit First professional. I've just been working on that methodology in my own business.
Well, it makes sense. I mean,
it does. It's very logical.
Yeah, makes total sense. I'm gonna have to go and finally pick that book up and give it a good read, because I hear a lot of people, say it's changed the way they view money. It's changed the way they view their budget, everything. So I'm glad. Thanks for the overview of that.
Yeah.
Oh, did we cover everything that you wanted to say about the IRS, the benefits?
Let me just give one more little piece here, because this is an important one. The last thing that the IRS says about the reasons to keep good records is it supports the items that are reported on your tax return, because we as business owners and as people, so whether it's a personal deduction on an itemized deduction on Schedule A, or if it's a business deduction, we have the burden of proof of being able to prove that that is a legitimate deduction. So you have to be able to substantiate the expenses that you're saying, yes, this is a business expense. And so when we have good records in QuickBooks, and I don't know in other automated systems if there is this ability, you can actually attach receipts to the transactions themselves. So then you get a better, kind of more complete picture, where you not only are saying like, yes, this Amazon purchase really was for office expenses. You can look at the receipt that says, oh yeah, this is for envelopes and paper and whatever.
Aha. Okay. That's good to know. Yeah. So we have the burden of showing proof that it really is eligible. Okay.
Yep, exactly. So it's good to have, and it can also, you can have that in a folder of expense receipts, but under an audit, you're probably going to have to produce those one way or another. So the more organized the system, whether it's paper or digital, the better.
Yes.
Yeah.
I think that's so wise. That's great advice. Okay. This has been just, I've learned so much, and I can't wait to put some of these things back into practice, or amp up my practice of bookkeeping. And you've just given me some really great things to think about. And for our listeners, I hope you guys found this helpful and that you found value in it. If you want to learn more about Michael, how do they find you?
Yeah, my website is mspencerbooks.com. So M for Michael, mspencerbooks.com.
Okay. And I will put that in the show notes.
Cool.
For sure. So thank you so much for being here today. This has just been, I've just learned so much. Thanks, Michael.
Yeah, you're so welcome. It was my pleasure.
Well, that wraps up another episode of The Therapy Show with Lisa Mustard. I know there are hundreds of thousands of podcasts out there, and I'm thankful you've chosen to listen to mine.
Be sure to visit lisamustard.com to access the show notes and discover more fantastic content.
And I'd be grateful if you subscribe to the show. Thank you.